Welcome everybody. My name is Kevin McAdam. I'm the project lead for the EPA International Trade Project. As part of our project, we are doing an initiative where we're going to provide the EPA membership with a market expansion toolkit. I'm delighted to introduce a representative from Mastercard Malaysia today, who will be asking some questions about one of the areas that we are focusing on. Perry, if you'd like to introduce yourself.
Good morning, Kevin, and thank you for having me today. I'm glad to be here. Hopefully I can provide meaningful insights in Malaysia. My name is Perry Ong. I am the Country Manager for Mastercard Malaysia and Brunei. I oversee both countries, and I've been in the office for the last 5 years. So I'm happy to answer your questions and see where we can take it to.
Thank you, Perry. That's great. And as once again, we're really delighted that you're able to join us. Malaysia is a really fascinating country, and we found that from sort of the initial work we've done on it, but we really want you to sort of probably help us share about some of the sort of aspects that are happening in the country at the moment. So I suppose my first question to you is, or how has the payments industry developed within Malaysia over the last sort of 5 to 10 years?
Yeah, so I think, Kevin, if I could just give a little bit more color. First of all, Malaysia is indeed a very, very sophisticated and mature payment market, and that dates back at least 40 years. But I won't go too deep into history. I think the 40 years where the market was ruled by the Amexes and diners on the charge card scenario, but that has mushroomed towards the 90s, where the credit consumption was fueled largely, and that created an explosion onto the credit version of cards, and that's where Amex and the diners sort of disappeared, and Mastercard and Visa took over. You can say it was the next chapter. That's predominantly been a payment scene in Malaysia in terms of the traditional plastics and dominated by credit card. Central Bank or Bank Negara Malaysia has a view that we should invent ourselves for the future, and felt that the market was at least 10 to 15 years behind first world countries in terms of the sophistication of card acceptance and card issuance. And that's where Central Bank decided that to look into coming up with a framework. So they have designed a payment card reform framework back in 2014 for the single purpose of fast forwarding Malaysia into the capability, into the first world, like I said, the capability of issuing beyond credit cards. And they had grand ambitions. The payment card reform framework saw that, number one, the merchant acceptance footprint was weak, and that should be the stimuli to be able to provide any form of card that you bring to the market must have a broadened merchant footprint that would be able to create a success formula. And the second part is it was very, very specific. Central Bank had a view that debit cards will be able to create and generate the next excitement for the market. As I said, it's been traditionally credit, and the market was sitting at around 230,000 POS locations or merchant locations with 9 million credit cards. So the payment reform card framework, or PCRF, or payment card reform framework, came about and said we need to hit 800,000 merchants, and we need to hit 1 billion debit card transactions. That's a clear-cut two main targets. The enablers was going to come from one is looking at reducing the interchange, so that when you bring down the interchange, which is a formula for a merchant discount rate, that would then bring on more merchants to come on board. And the second one is that you have to issue debit cards to every single deposit account. And we did that successfully by issuing about 45 million debit cards starting from 2015 to where we are right now. So by creating the market on two fronts, one is the acceptability factor or broadening the merchant footprint to hit 800,000, you automatically will facilitate the debit card to be able to use more and more. Now that's on the traditional space. That's something that we are proud of. And I think apart from COVID that hit us in 2020, we would have achieved that target quite easily. Now fast forward to where we are right now, we have 700,000 POS locations, and we have 175,000 QR locations. And as I said just now, with 45 and 40 or 46 million debit cards, we have generated 500 million of debit transactions last year, coupled with 500 million of credit card transactions, which has been the mainstay. the country is proud to say that we have now surpassed 1 billion payment card transactions, credit, debit, and to a small extent, prepaid. So that's a massive achievement for the country. But what's next? Now, I think the Bank Negara or central banks eager to then say, what are the metrics for us to take a sort of a check-in to look at what have we done successfully by hitting these high notes? What has come down in terms of cash or checks? I'm happy to also share with you that in terms of Malaysia, we had a target to also reduce checks. It has a corresponding impact. The checks have come down from 133 million to 60 million checks over a 5-year span. So that's one great reduction because it's very archaic, it's costly. Cash acceptance is still lingering around 85%, but it's come down from the 90s. So that's again an improvement, but it's far from the first world countries where you can achieve probably 40 or 50% in terms of cash acceptance. The second part is that even the ATM network, which primarily is to serve cash outs, has come down. Now ATM, we were standing at about 9,000 machines, ATM machines. And because of all this proliferation, the machines have come down to 6,000 terminals. So that's again a cost savings to the bank in terms of infrastructure. And you're actually creating a positive spin because the lesser ATM is out there, the more you push towards the cards, the less cash is being used, and it's going to be a positive cycle. You don't go back into putting cash back into the banking system. The other second a very good metrics was regarding branches. Bank branches have reduced from 2,000 to 1,800, and correspondingly as well, cash deposit machines has reduced from 5,000 to 1,000. So all these successful metrics as a leading indicator to tell that we can now move on to the next phase. And the next phase actually comes from the non-traditional space, Kevin. If I could just go very quickly, the non-traditional space will be all about the wallets. And in the wallets, we have a very, very competitive, highly fragmented market of more than 45 e-money issuers. Now, they come under the e-money act, the present e-money act. And coincidentally, Central Bank is on the verge of doing an exposure draft, which will revamp this e-money act to future-proof. I mean, coming out of the COVID, we would have seen a lot of acceleration. We have seen that it's catalyzed in terms of wallet payments or touchless or contactless payments. So it's only right to future-proof with a framework that will cater for the way of doing business in the different form. Now, just to share with you, in terms of the e-wallet players out of 45, there are 3 juggernauts. You would know Grab. Grab has been a big player in terms of e-wallet. The second player is Touch and Go, which has primarily been a toll card. And the third player is Boost, which is telco backed. So you've got 3 very diverse juggernauts who are leading the e-wallet space. Now, what have they done? During COVID, the government has done a lot of wage subsidies. They've done a lot of, handouts to what we call the bottom 40 of the society, and they need to receive cash. So the wallet was one way of passing the money to them. And because you're putting, fuel into the wallet, customers get used to using the wallet. And that has created an explosion. But from 2019, wallet usage was about 4.5 billion US. It's now 7.5 billion US. So it's nearly doubled in the span of 1 year, simply because 1, you've got new funds coming from government fiscal injection. 2, there's a COVID awareness that you want to be contactless. So I think that's the non-traditional space. And if Kevin, if I could quickly, in the interest of time, just to say that what has it created apart from the explosion in the wallet space? Actually, there's cross-pollination in a positive sense, where the other space has also come improved. For example, contactless, whether it's MySpace, where Mastercard sitting today, back in 2017, contactless penetration was single digit. But today, in 2021, contactless penetration against physical face-to-face transaction is more than 50%. So you can say that we are chasing up to UK, we are chasing up to Singapore in the terms of contactless penetration, and even, of course, the world-class Australia. So that's on the positive metrics. Sorry, Kevin, you were about to ask.
No, that's wonderful. That's really a fantastic information and some great stats there, Perry. I suppose what's really interesting from your conversation there is how much there's been a shift. I suppose the key thing that will really help, sort of for market entry is probably I just need to get you to put your crystal ball on for a moment here and what you think is going to be the next best thing? What is going to happen going forward? What do you see as the sort of growth areas? There's some real interesting dynamics you shared there in terms of credit and debit and e-wallets and what have you. What do you see as the sort of real growth areas going forward?
There's quite a lot of new things, new bells and whistles entering the market. As I said, I think primarily consumers are now getting used to the idea of contactless or touchless, right? So the sense of security. Now, at the same time, consumers still want choice. That's for sure. I think everyday choice is something that they are demanding right now, and that's a sweet spot for Mastercard for several years now. What Mastercard does is front and center is providing the freedom of choice and the payment choices to consumers to make sure it's friction free, the entire journey of using. I guess you don't jump out of bed thinking how I'm going to pay. You jump out of bed thinking what you're going to consume or what you're going to buy, and payment options then become at liberty at your step. And then you make decisions in terms of rewards, how happy you are using, how easy for you to use it. But coming back to your question, Kevin, I think first of all, the market has to be accommodative. Now, I want to call out that central bank has created a very accommodative environment, and they have policy frameworks that are actually very encouraging. As I said just now, in terms of the exposure draft for e-wallet, the whole idea is to have a voice to ask the industry as to what do you want in order for you to play in the Malaysian market, and how would it be able for me to stimulate more competition without stifling? So that's one. The other second framework besides the e-money exposure draft was I talked about just now, the payment card reform framework, which is the foundation. The third one is central bank came out with what we call a risk-based approach. Now, if you're familiar with Malaysia, the other part is in the online space. We talk about the physical space. Now in the online space, essentially the market has been moving on what we call one-time password. If you're familiar with 3D Secure, that's 3DS 1.0. And we're quite happy with 3DS for many, many years. I think it's outlived its purpose. Now fast track to the future, we need to look at new ways of authentication, biometrics. We look at behavioral biometrics, for example. So in order to do that, the current framework doesn't serve that purpose. So central bank has created a risk-based approach, which allows for multi-factor authentication. Now, what does it mean? Issuers and acquirers should scramble and look at their capability to approve a $10 transaction. You don't go through the same method as a $1,000 transaction. So it could be based on behavior, it could be based on habitual spend, or based on historical. They'll all then lend that decision intelligence to the issuer to make that quick decision. And the framework that central bank has facilitates and creates this accommodative. Now, in terms of the new products, let me go divide into some spaces. I think the first part will be looking at the physical merchant space. Now, I will use this cliche. It's tap, dip, swipe, scan. Now, in terms of swipe and dip, that's very old. Swipe, it's MaxSwipe. Dip is smart chips. Now, in terms of tap, that's contactless. In terms of scan, that's QR. But that technology right now, the hottest one right now is tap and QR, which is basically tap and scan. In tap, contactless in two forms. The physical POS terminals that serve the purpose, those are the tier 1, tier 2 merchants. But there are a lot of micro SMEs who needs to accept. Now, accepting payments is a problem. It's a pain point for micro SMEs. And they need to break away from cash. How do they do that? So using their smartphones, the phones now become basically a smart device to also behave like contactless. So we call it tap on phone. So imagine, Kevin, if you're in Malaysia, you may walk into a retail, you're happy using a normal POS terminal, but you walk into a high street and you want to have a bowl of noodles. That person the owner could just flash out his or her handphone, and that device becomes contactless. You haven't done anything different, but the merchants have. So that's something great. We are creating more usage, more. Now, in terms of QR, as I said, COVID as a rude awakening. Because of COVID, the countries all have contact tracing. Contact tracing apps are pivoted on QR. Now, that means massive public education. You don't need to educate people how to fire up an app, use QR. On the same vein, you're now able to tell the consumer, since you're going to fire an app, you could also use QR to pay. And that's where Mastercard comes in with our merchant presented QR, or in this case, it's a static push QR where the stickers will be, the tags will be in front of the cash till, and you just scan that QR for a bowl of noodles. That's in the merchant space. Now, on the issuer side, for the card member side, correspondingly, customers now today is used to tapping the card and I have a physical card. The form factor has also changed where the phone becomes my virtual card that sits inside there, that those cards are tokenized, which is basically your Samsung Pays and your Apple Pays. Now, the same form where I'm using this phone to pay at the POS terminal that's NFC or be able to accept contactless, I can also use it at the smartphone. At the same time, now there's an opportunity for me to use my phone to use QR payment. Now, as the merchant is equipped to receive QR payment, I, as a customer, I can have a freedom of choice of using my physical card, using my phone, or using my QR in my phone to be able to scan the QR sticker to be able to facilitate the transaction. Now, what does it mean for the micro SMEs? Is that one is low cost, it's very efficient, and I receive my money really, really fast. It's near real time. Merchants are receiving their money within 30 minutes. Now, it's all about cash flow. So if you make the merchants have a means of accepting payments cheap, fast, and receiving cash flow very, very quick as opposed to traditional 1 day or 2 days, I think you have created a very good ecosystem that's supportive of you then pushing card members to be able to use other form factors. Besides that, on the card member side, the hot buttons are BNPL. So BNPL or buy now, pay later, as you know, PayPal's Pay in 4, Apple Pay later is coming in. We don't have the Affirms and Klarnas or Quads in Malaysia, but we do have the Pine Labs and the Faith. Now, this dynamic duo of Pine Labs and Faith have created a very strong proposition where you have pay in installments. At the same time, you get rewards. And this is targeting the young millennials. So what have you done is you have created affordability for the millennials. You have created, I think you have got the right in terms of segment marketing to go after the millennials because they will get and understand their needs for them to pay in installments and they get rewarded at the same time. And you're also helping the merchants right now to be able to generate sales because in tough times like this, the NPL helps out. So I think, Kevin, to answer you, I'm just looking at my notes. Where you talk about QR, you talk about tap on phone, you talk about BNPL, and of course, underpinning all this, Malaysia will have 5G technology in 2022. And that would be the backbone of infrastructure in terms of super speed. And I think that would basically bring everything all together.
Okay, wonderful. Thank you, Perry. It's really interesting you say that. QR codes is such a hygiene factor in Southeast Asia, and I'm really pleased that you sort of highlighted that. And you're very right about BNPL. It's really starting to emerge as another alternative. So it was great to hear firsthand views on that. I think just in terms of the last question for you. So if thinking from our EPA membership here and their desire to sort of enter into the Malaysian market, I want you to give a perspective on what you would consider to be the key barriers, challenges that they need to be conscious of, as part of their evaluation about entering that market. So if you could share what you would see as things that they need to be mindful of.
Sure. I think while I said that the market has got a very accommodative policy instrument, which rightly so, and the e-money act, for example, is going through a draft. I think the aspirants or the fintech players who are looking to come into the market should pay attention and make sure that they understand the framework, because I think lack of comprehension sometimes could get into a little bit of preparedness to enter the market of speed and to have the right capital to support you. The second part is that because the market is so fragmented, there's heavy cash burn. And what I mean by heavy cash burn is that the big players are dominating the market with incredible rewards and rebates. So the customers are getting used to this junkie syndrome where they're expecting gratification every single time you use a wallet. If new players come into the market and if you don't have a good customer value proposition or you don't have dry powder to sustain that kind of cash burn, then you will not be able to stay the course. It will be a short-lived victory, and probably it won't be a very smart decision to do that. The third part is I think you need to have a differentiation. I'm going to give some tips here, but let me just give you a classic case in point. We have the biggest partner in terms of digibank in Brazil called Nubank. I'm quite sure you're familiar with Nubank. And the CEO has shared with us, when he entered Brazil, he knows that it's very difficult for a fintech or a wallet player to go and create a prepaid or a deposit card. simply because there's a trust issue. Fintechs normally take some time, or the digibanks, to build that credibility. Now, I've been banking 20 years with Barclays, and if to shift to a new bank, it has to be bells and whistles to give me a high interest rate or something else. Otherwise, I won't shift. I'll be worried that you won't be able to serve me well. Now, in that respect, Nubank decided to enter the market with a credit instrument as opposed to a prepaid instrument. And the simple analogy is, it's tough to take money from customers because they don't have trust in you. It's easy to give money to customers because everybody wants credit. And I think Nubank was genius. They went into the market, they created that, they really expanded their balance sheet. So for people to come into the country, think differently. I think we want to be able to differentiate from the wallets that are currently playing in the market. And the last part I want to give are basically a secret sauce, if you will, Kevin, because the market, from the 45 players, a lot of them have put in an interesting bid to become a digital bank. Central Bank has issued the digital bank framework, which was the cutoff was June 30th last month, and 29 bidders have put in their bids. A decision will be made by first quarter 2022, and Central Bank has indicated very clearly that they're looking for 4 or 5 key points if you want to come and support the digital bank. What it means, Kevin, is that the fintech players or solutions provider, later startups, they not necessarily be a contender to be a digital bank, but they can become the enabler to the digital bank. They could be supportive, it could be a co-op, it could be a JV, it could be a partnership. But the secret sauce that Central Bank is looking for, number one, is that you have to be able to serve the underserved or the basically unserved market, where traditional banks have failed to meet. Because I think traditional banks, incumbent banks, are looking at profitability in a different slant. So you should be able to come in and see whether you have transformative technology to do that, number one. Number two, if you have a ready ecosystem where you have a database that you serve, that would be superb, because you then have a ready platform to touch that community. Example, like Grab or Uber. Because when they come in, the riders, the drivers, the restaurants, they are all needing some kind of financial assistance, loans, shopping, guidance from you, the provider. So that by having an ecosystem, you have a ready-made recipe to enter the market. For example, you could be having a particular community in the region. The third one is looking at a specialist capability. If you have SME or wholesale banking capability, then it's a very targeted approach. So your solution could be a panacea for the SME community. So that's something Central Bank is looking for. The fourth one is back to basics. They're looking at innovative basic banking solution provider. Now, again, big banks are saying, I have no time for this. I'll be looking at progressive services to give to my customers. So basic banking solutions provider is absent. And if you can provide that, that would be great. Like, for example, financial management tools. And the last one is, if you are dabbling in Islamic financing, Islamic digital bank is something that they're looking out for. And this is typically value-based banking, or what we call social finance under the Sharia law. So if you have capabilities in those 5 areas that I called out, that would make it very, very easy for you to fit into a very hot market quite immediately.
That's wonderful. Thank you, Perry. Really excellent insights there. And it's interesting, how the Malaysian market is opening up, and particularly it's such interest about how the different jurisdictions have all sort of like invited support to sort of develop their banking solutions, and also the financial exclusive there. I noticed in your brief, but that was excellent. Thank you very much indeed. A really insightful and helpful guide to our membership on the benefits of and the opportunity of entering into Malaysia. Thank you.
That's fantastic, and I really hope to invite more and more of the fintechs to enter Malaysia. Mastercard is here to enable that capability. We power up banks, we power up non-banks, so we're happy and I'm eager to receive more fintechs into the market.
Indeed, thank you very much indeed.
Yeah, thank you for having me.